All right. What is going on? We got YouTube, Instagram, X, Facebook for who's still using Facebook. There we go. All right. Do you guys mind letting me know that you can hear me? Just let me know if the audio is okay. We should be rocking now. I know TikTok has me. How do you structure your deals for investors? When do they expect a return on ground up? Good question. All right, so how we structure our deals is different every time. I would say the most typical structure is you have a preferred return. So basically a preferred return means that the investor is going to get a certain percentage first, and then once they've made that return, then the general partnership can participate in the deal as well. I would say that lands typically around 6 to 8%. And then after that, you typically see something called a waterfall. This is one of the most confusing but most common used thing in private equity is the profit split or the carried interest or the waterfall. And it basically is a tiered structure of the profit split. And so I've tried everything under the sun. I've done pref with a catch-up and then a tiered split. So once investor sees up until a 10% return, maybe they take 90% of the deal. So it's a 90-10 split. And then when you get to like 13% return, it goes to like a 60-40. And then once you cross like a 15% threshold, maybe it goes into a 50-50 deal. I've tried it all. Where I've landed at, and this has been the best thing that we've done as far as investors understanding it, simplicity of the deal, and I think just overall, it's just good this way. We don't do a preferred return anymore. The investor takes 100% of the profits until they're made whole. So you invest $100,000 with me, you're getting 100% of the return until you get your $100,000 back. Once you get $100,000 back, then the profit split comes in, and we are doing, on our newest deal, it's a 75-25 split. So investor takes 75%, commune takes 25%. Super simple. You can structure it however you want, considering that an investor says yes to it. It usually comes down to the deal metrics, though. If you have a huge return, you may be able to take more in the deal as the operator. If it's a thin deal, well, an investor is very quickly going to see that your returns don't compete with other companies out there. And it's either a bad deal or you're just too rich, you're too greedy. So you might have to adjust. Tom Penny is broke. Tom Penny, I actually heard a story about Tom Penny that he barely spent any of his money ever and had this account that his parents were managing or that Don Brown at S was managing. And it was actually pretty sizable. I have no clue if that's true. I have no clue. That'd be interesting to find out. I always thought it was so interesting finding out what pro skateboarders did after skateboarding. I was so curious about that when I was a kid. When I became a pro skateboarder, I was so terrified about what that was like after my career. And now, I know what my friends do, but there's a lot of pros out there that I just haven't kept up with. I would love to hear what their life is like. Maybe that's something we do for the podcast. Maybe the next podcast guest, we do a run of pro skateboarders and retired pro skateboarders and see what they're doing next. Michelle Lee, do you have to be accredited to participate? Okay, good question. So I cannot say a ton with this right now, but I think I could say this. Right now, all of my offerings, which means things that you would invest with me on, you have to be accredited. So an accredited investor means you make $200,000 a year as an individual. If you're married, you collectively need to make $300,000 a year, or you have a net worth of $1 million excluding your primary. So that's what it means to be accredited. All of my offerings right now, you have to be accredited. But, and this is what I'm limited on saying, I am working on something that I think will be here in the not too distant future that may remove that tag. So just keep following me, keep paying attention to what I'm doing. If it goes through, you'll see a big release, and then that would change the game. That would mean you don't have to be accredited anymore, which I actually never liked. I never liked that. I built a company so that people can invest in real estate and help them become financially free, and then the barrier of who could participate with me was so limited. I never liked that. Thoughts on XRP? XRP is my highest performing crypto right now. It's freaking going nuts. When did I get in on it? Oh, I'm live on my phone, so I can't tell. I think I got in on XRP when it was definitely sub $1. I think it was like 40 cents or something like that. And it's at it's 250 now. So the thing is, it's moving for sure. But it doesn't mean anything if you're not, it's cool. Like I look at my crypto accounts and I'm showing like big gains, but I'm not selling them. So it's just paper gains right now, which I'm not mad at, but I'm not realizing it. All right. What are your favorite REITs? Parturo, that's a good question. I haven't looked at a REIT in a very long time. Once I started investing in my own real estate, I take that. That's not actually true. Once I started investing in private real estate, I stopped looking at REITs. REITs were something I was looking at when I was young, when I didn't have a lot of money to invest in real estate, so I just didn't meet the minimum investment for a lot of groups. That's when I was looking at REITs. Once I found private real estate, I started investing in private companies. And then now that I run real estate, my company is basically that. I just don't pay attention. I haven't paid attention to public REITs in a long time. It's probably something I should look into. Maybe give people, like some opinion on it. But he's not in the street. Don't worry. Are you guys talking about Tom Penny still? What does focus look like for Mikey Taylor? What does focus look like? Well, for me, I'm interesting. Like my brain is kind of funny at times. I'm either all over the place or I'm hyper focused. There's no like in between for me. And what that looks like is, when I'm interested in something, it's freaking tunnel vision, borderline obsession, and you can't really peel me from it. And if I'm not interested in it, I'm all over the place. I think I have ADD in that regard. And so everything for me is making sure that what I'm doing, I have interest in, and I typically try to patch that or match that with purpose. That's what kind of keeps me in longer than a short whim. But it is, it's a little wild. It can be, for example, like in my office, I've got 17 people in the office. And if I'm not locked in on something, I'm basically walking around the office, talking to people. I'm actually being super distractive. And so I kind of have to force myself back in. But if I'm locked in on something, they won't see me for a freaking day. I'll just be head down into it. So I just know that about myself, and I try to create guardrails so that I'm not too distractive and I'm not doing stuff that's not producing a return ultimately. All right, Mikey, would you ever be open to investing in a skateboard training facility gym in Oregon? Well, to be totally straight and real with you, the answer is no. I wouldn't be interested in investing in it, but I would do anything I could to help you succeed. The reason being, one, what I'm investing in right now is the box is very small, and retail or kind of service-driven, in-person businesses, it's just not on it's not my investments right now. And I'm trying to be careful saying that because I don't want to talk you out of doing it, but it's just not what I'm investing in right now. I love that you are wanting to do something in skateboarding. For me, like what I'm investing in right now, I'm investing in real estate. I'm investing in my business, and I'm really starting to get into. I have a little bit in crypto. It's not heavy, but I'm really starting to get into property tech companies, like tech platforms or apps that help you manage physical real estate. I'm really liking. I've got a couple investments in fintech companies, but I'm kind of liking those. So that might be the other alternative that I'm investing in beyond real estate. But right now, it's so heavy real estate, and it's a lot of it's in my business. Like we've reinvested in our business now for multiple years. We're not taking dividends as partners. And so I would say that's my stack: my business, real estate, and that's taking the big bulk. And then after that, it's probably on the tech side right now. XRP is being good to me. Yep. And I don't have a ton of money in it, but for everybody talking about XRP has been good to me. Are you able to invest in fashion companies or gaming companies like as a stock? James, you are able to do that if they are publicly traded or if you have access to the company that's raising money. You might be able to get into one of those rounds. The thing about that, you got to have access to the deal, and then you have to deal with a minimum investment. You typically have to be a accredited investor, but you can invest in companies like that before they go public. You just have to have access. That's the hard part. Awesome updates, Duncan. My pleasure. Who is the best ex-pro skateboarder at golf? I think the best pro skateboarder at golf is Malto. I think Malto's still a pro, but I think Malto's the best skater at golf. The ones that are good, Zach Sarasosa's good. Zion's good. Jack Fardell is a really good golfer. Eric Costin's a good golfer. Tim Gavin's a good golfer. Who else is a good golfer? Malto's phenomenal. I think Malto could be the best. I'd probably put my money on Malto. Don't want to ask anything. Just want to say thank you for being such a great role model for both my children and now adulthood. Streetum, I appreciate you. It is absolutely my pleasure. That just made my day. All right. Oh, James, what do you mean by rounds? Okay, so when you are starting a company, you typically have multiple rounds of investment. So what you'll see is usually a friends and family round, or they might call it a seed round. And so that's like, it's usually a small amount of money. It can range anywhere from a couple $100,000 to typically like 1 to 1.5 is usually where you see seed rounds. And then after you get past your like friends and family or your seed round, you usually go into a Series A round, a Series B round, a Series C round, until you eventually go public is usually what these companies do. And usually each round is a larger amount. So maybe you raise 1 to 1.5 on your series, on your seed round or your friends and family. And then your Series A might be a $15 to $20 million round. Your Series B could, be $100 million round, and so on. And so those are the multiple rounds. If you're a real estate company, I know you asked on like clothing or fashion. On real estate, that's typically new funds that are created or new offerings. So for my company, for example, we had a storage fund that was open this year. We had another fund that was open, and then we had an individual project. And on the storage side, there's been multiple rounds in that portfolio. There's been 4 actually. So there's been 4 times in the history of that portfolio that we have opened it up for new investors. That's typically what a round looks like. A round is usually opening it up to new investors. All your existing investors typically get first shot, and then they bring on additional capital. So that's what I mean by additional rounds. I have a question. What would you have done as a businessman to save Lakai? Man, that's a good question, and I'm just going to give you my honest opinion. And I already know as I'm going to say this, there's going to be people that aren't going to like it. Okay, so Lakai, well, what I would have done different, and knowing that, I know Rick and Mike, I know the guys at Lakai, what I would have done, I don't think they would have done. It didn't line up with I think, their purpose in the brand. But I will also say that hindsight's 2020. So it's a lot easier to tell Lakai what they should have done today than when they were actually in it. But Lakai was a core brand. Lakai was competing with your Americas, your S's, your what would be some Fallen at that point. Like they never wanted to go mainstream. And so when you started seeing these big brands come in, right? You had Nike come in, you had Adidas come in, Converse come in. There were only two options that were going to happen. Either the skate industry wasn't going to allow them in like they had in the past, or if they let them in, you would get to a point where the core skate brands couldn't compete. And so if you were Lakai, you would have had to make the choice of going mainstream, going beyond skateboarding, and trying to get a larger audience base, or stay core and your just time was limited, And so I think if it was me and I owned Lakai, I would have probably, look, in hindsight, this is what I would have done. I would have launched it exactly how they launched it. I would have had Fully Flared come out. I would have tried to go mainstream and then try to get it to an exit. And I know that doesn't totally answer your question because you were saying, how do you save it? And I'm saying I would have built it to sell it. The reason why I would have built it to sell it is until you see a massive snapback, which I'm not sure we're going to see, the core skate companies aren't going to survive, I don't think. The big brands coming in, you just can't compete with them. They're too large. And so I think their only option, knowing what the industry did, was to build it and sell it, I think. And so, I mean, what that would have really looked like, they should have sold Lakai when they sold DVS. When DVS had an offer to sell, they should have sold everything with it, and then started another company. But I think that's what I would have done. Is my plan a good or bad one after I turn 18? Save up, creative finance property at scale. Okay. I would say, yes, that's a great plan. Save up your money. Creative financing is an awesome option. You have to get really good at knowing how to sell it. But yeah, you can get into deals with no money down, and then you start building out your portfolio. And then before you know it, you got a freaking army of assets that are paying you. Yes, you should absolutely do that. And I love that you're thinking about that young. That's very encouraging. They should go beyond the core skateboarding base, but give back to the skate community with the success. Yeah, that one, I agree with you 100%. It's going to be interesting to see what skate companies do now that, there's not really skate shoe brands left anymore. I mean, it's all the big giants. So it'll be interesting to see what happens. Probably what's going to be the tell is when we go through a downturn and it gets hard to sell product, we will see if skateboarding succeeds. We will see. Lighting is off. Water. Will you guys give me your 2 cents real quick? Do you mind? Is the lighting off? Do I need to fix my lighting, or is it something else? Do I just have a bad angle right now? What is it? Let me know, you guys. Can you guys see me okay? Hear me okay? Are you considering doing any projects like your Cleveland Sears project? Doe, I'm going to hit you in 1 sec. Light is fine. Have you seen the latest Arto doc? Okay, good. Andy, I did see the Arto documentary. It was unbelievable. If you guys haven't seen it yet, go watch it. It was so well done. Doe knows I'm not planning on doing a project like our Cleveland. So for everybody who doesn't know, we bought a mall right outside of Cleveland in Richmond Heights, and we bought it. It was basically vacant. And we purchased it. We started working with the city to get it entitled to build a pretty large mixed use community, a lot of retail. I think we had it at like 850 units of living. We ended up selling it. We did really well as an investor. The reason why we sold it and why I'm not going to do any projects like that in probably the next 5 years, I sold it so I could go all in on California. So, what I'm seeing in California, I think is one of the greatest real estate opportunities that I've seen in a very, very, very long time. The reason being, it's like, I think California is the perfect storm for a real estate investor. They have really bad regulations, a lot of red tape, and a lot of investors won't invest here, right? So you have an area where there's not a lot of competition. There's a high demand still for California. And, I know that there's people leaving, like the politics here is not great, but there is still so much demand here. I mean, today I was outside, it's 75 degrees. I'm in a t-shirt with my wife having lunch. This type of weather doesn't exist anywhere else. And there's a demand for that. So what we're seeing right now is the largest housing crisis the state's ever seen. We are so far below where the demand needs to be. So what that means, if you can add new units, they lease up so fast. And what we see is rent growth continues to climb. We see cap rates that are more compressed than other markets, which mean the value's higher. And so I am all in right now on trying to find distressed assets that I can buy at a discount, that we can scrape, and that we can build new housing in California. So that's why I'm not going to be doing any of the mall stuff right now. Maybe I will in the future, but I'm not sure. I'm not going to do that until I look around in California and go, okay, there's no more opportunity, which I just don't see happening for a long time. What's the biggest danger to the real estate market? The last one was mortgage default, but what do you see from your end? That's a really good question. That's a very good question. Okay, so Blaze, the biggest risk with real estate is typically development risk. And so I'm going to take California out of this conversation because California is not a normal market as far as regulation goes. And let's use somewhere like Idaho or even Texas. You could pick your Midwest state because it's happening in a lot of Midwest states. But let's use Idaho, for example. You have all these people leaving California and moving to Idaho, Texas, and Florida in 2020, 2021, mainly because, our state did a 2-year lockdown where a lot of other states did a 6-month lockdown. And so you had a big influx of people into Idaho. Well, Idaho didn't have the housing stock to support that many people coming in. So what happened to real estate prices? They went up, right? Too many people fighting for too few of goods. So then you see inflation on the asset, you see prices go up. Once prices went up, then all of a sudden developers are looking around going, oh my gosh, I can build it for this and sell it for this, I can make money. And then you see everyone jump into the market, and it kind of happens in a, what's the best way to say it? Like everyone is all of a sudden a developer. Right? So all these people that really don't have the experience needed to develop, they're developing now. And what you see is too much development. Builders build, that's their job, right? And once you see too much development, what happens is you start having vacancy. When you start having vacancy, you do everything in your power to lease up, let's say, your apartment. So you start giving rent concessions and discounts. And you start seeing that at scale because the overall market is saturated. And then all of a sudden you see a plummet, right? Cap rates soften, which means values go down and there's a crash. Once that crash happens, you're no longer in a position to develop because the return no longer makes sense for the risk, right? And so then you see a lull, you see no building happening. until you give it enough time where demand starts outpacing supply, and then you see the cycle happen again. That is real estate development, right? It's a cycle of a boom and bust with supply and demand. The reason why I invest in California is we're not seeing those cycles happen because our state is so heavily regulated that it has driven investment out of the state, and we just don't build. And so if you force the numbers to be below the demand because your policy is so bad, well, you don't see a correction. And that's exactly what we've seen this last year. We've seen, everybody who was hot in the Midwest and the South, investor-wise in real estate, you're looking at all their investments starting to crash. And all of the investments here in California, we're still seeing rent increases. And so it's just the state stops a crash from happening. So I would say that's the big risk right now for real estate investors, I think, is investing in areas that have a lot of growth happening. And depending on where you are in that cycle, if you're at the top, you run the risk of it becoming saturated by the time your property is realized. I'm worried food inflation is going to get worse with possible regulations on food industry by RFK. Well, I would say I'm not so concerned with that. I think what you're going to see in a lot of industries is deregulation. But, on the RFK thing in particular, our food is so bad. Like I was in France last week. The food in Europe is so much healthier than what we have in America. Like the crap that we put in our foods is not allowed anywhere else. And so, look, do I love the idea of producing a good or a service for cheap? Of course I do. But not at the risk of poisoning everybody. And so I think we need a massive overhaul in our food. Our food is just like, we are not healthy. And so one thing I noticed, and this was interesting, when I was in Paris, everyone smokes. Like smoking cigarettes is normal out there. Everyone does it. And yet their life expectancy is much better than America. And a lot of it is because they're actually eating real food. And so I think regulation is needed there. Now, can you over-regulate so that it becomes ridiculous? Of course. I'm hoping that you see the right pairing with deregulation. I'm really hopeful that DOGE is going to kind of help on some government spending, that we might be in a position where you don't see inflation, but you are right. We do run the risk on some of the stuff that in the short term, there is a little bit of pain and uncomfortableness that could be at play. Sending some skate love from Germany, down since 2000. Have a nice one. Jacob, I appreciate you, my man. What would happen to the market in California if they suddenly adopted sensible regulation? Joe, you would see building like crazy. You would see investment like crazy. You would see now, there is a difficulty in California with land, right? You go to Idaho, land's everywhere. You come to Southern California, especially the places you want to live, it's not. And so it's not going to be as easy, but if you deregulated this place and cut back the red tape, you would see way more housing come online, which would mean you'd see prices come down. It's the only way. In Europe often, and it's appalling in America, need higher standards. I agree. I totally agree. All right. No, he likely has another stream going. Philip, oh yeah, somebody asking. Yeah, I have sorry, everybody on TikTok. I have a stream going and TikTok removed my stream key from me, which basically means that I can put all the apps on one platform is what I'm doing. So over here I have, YouTube, Facebook, X, Instagram. I think I have LinkedIn on here. And I normally would have TikTok. And they removed my stream key from me because I wasn't going live 3 times a week. That's like the threshold. I didn't realize that. I thought it was twice a week. And so I'm trying to get it back, but right now my only option is to plug my phone in here and then do the stream here, which is annoying. If anyone has any other options, let me know. I'd love to figure it out. But for anyone in here, I'm checking this one and I'm responding. I'll make sure that I get you guys answer. What's he writing with that pen? Philip, that's good. So I was doing two things. I was creating some content on here, and then I have a city council meeting tomorrow. So before this, I was basically getting all my notes prepared, and then I just held on to this thing. Something comfortable about holding a pen. I don't know. Did you see home condo prices ever going down in SoCal OC? It seems they only go up. Okay, so yes, the better way to do this is what could bring housing prices down, and then what's the likelihood of all of those scenarios happening? That's like probably the best way that we could calculate, or forecast what real estate prices are going to do. So the biggest one is housing supply. So what could bring down prices in OC, townhomes, condos? It would be building more houses than there is demand, and then you see a correction. The other one is if there's such a significant downturn that people stop buying and then people are forced to sell, you could see a supply-demand shift. Or a big one could be investor behavior. Like if the next generation goes, I'm never buying a house, like they're looking at prices and I would say 1, giving up, and then 2, finding alternative solutions to building wealth, that will bring demand down as well. And then that could change housing prices. Now I'm holding 2 pens. All right. On YouTube. I should actually, that's a good one. I haven't been paying attention to what's going on. Okay, Nick Dompierre. Question. For example, Nick Dompierre became a bodybuilder and hooked into fitness. He described his addictive characteristics and how his progression on his body made him look at the gym like a skate park. 100%. Frederick, I did the same thing with my company here. I treat commune the way I treated my skate career. Obsessed, setting goals, and stopping at nothing until I get there. What made you stop skating even as a hobby, not as a profession? Cody, that's a good question. Okay, so I stopped skateboarding professionally. That was an obvious one. I didn't have sponsors that would pay me anymore. So I was technically no longer a pro. The hobby part for me was the decision to not skate anymore from a hobby was more time and priority. I guess those are one and the same. So for me, it's not even me, it's everybody, right? We only have so much time in the day. And I basically was looking at everything that I was responsible for, which was a new startup, right? I started Commune Capital. It was a new company. I was raising money from investors. So I had a lot of investors that were entrusting me with their money, which I don't kind of take lightly, right? It's not easy to make money. We sacrifice a lot of our time to do so. So with our investors, I didn't want to be managing their money poorly. I wanted to do a good job and make them a return. So I had that. Then I had two little girls, and then my wife and I wanted to have a third, and then we eventually had a fourth. So I had kids, and then I ended up running for city council. So now I had a newer business, a side hustle, a wife, and a family, 4 kids, so a family of 6. And so I was looking at that going, okay, if I'm going to skate, where am I pulling time from? And the only thing that I could really pull time from was hanging out with the kids. And I didn't want to do that because I did a lot of that when I was skating and I missed out on a lot. So that's kind of on ice right now. Now, if one of my kids gets into skateboarding, that'll be a very easy way for me to start skating again because I'll be able to hang out with them and skate. But right now, just the time's not available. Now, when I do say that, some people do say like, well, what about golf? Right? We see you out here golfing. Golfing takes 4 hours. You could go not golf and skate for an hour. That is true, but how I've gotten away with golf is plugging it into my business. So I created a golf channel, a business golf channel, so that I could golf. And two, it's a lot easier to pair golf with my business than it is skateboarding. Like a lot of what we do is, find real estate. And we also look for investors. And it's a lot easier to take somebody out to golf and then build a relationship to talk about an investment than it is to see if somebody wants to go skateboard. And so I would say skateboarding is just on ice now. I don't think that's forever. I think that's just for a moment. Quit your yapping and skate more. Jeremy didn't like it. I'm an old fan, grew up watching you skate, also grew away from the culture due to life offering half other things. Which you the best, brother? Jurassic Wizard. Thank you. I appreciate that. Yeah, I mean, it's hard. It's not easy to do. I do miss it. And so I'm hoping I'll get back into it. I would say the other thing too, and we'll see when this one snaps back. When you skate professionally, you get so used to skating at the highest level. And then if you're not skating 4 to 5 hours a day, every day, and the fact that you get older and your body just doesn't do what you want it to do, you can't skate at the same level. If I'm keeping it real with you guys, it is not as fun when you can't skate at the level that you once could. Like, it's like your brain knows how to do it and your body won't do it. And so there is that. I haven't overcome that hurdle yet. I don't entirely know how to. So I like my personality type. Well, this goes back to the beginning. I'm super focused on things that I can improve on, right? When I set a goal and I can get closer and closer to that goal, that's what hooks me. And that's what hooked me about skateboarding. Like, skateboarding was so hard that I never got bored because I could never master it. But now it's going in the opposite direction. I'm only going to get worse at it from here. And so I got to figure that one out. I haven't solved that one yet. I'm 22. I feel like I haven't developed skills that could set me up for success. If you put yourself in my shoes, what's the first thing you would do, and how should I dedicate my time? Francis, really good question. So what I would say is start taking, almost like take notes of this. Take notes on the things that you do that energize you, that seem like you're just flowing and it's easy for you to do. Like, for example, for me, if you had me build out a pro forma, which a pro forma is like a financial model for our investments, I'm going to go through that, finish, and just want to go to sleep. It's going to suck all of the energy out of me, right? Something like a budget. Like doing a budget, suck all the energy out of me. So that's not me in my skill set or my purpose. Now, if I go talk to people, presenting something, speaking at something, creating marketing ideas, like stuff like that, I can do in my sleep and I'm fired up, right? Here's a good way to actually highlight this. My partner, Jerry, is analytical. He runs all of our financial models. He's like kind of more of the brainiac type, and he's introverted. For me, I'm not super organized. I'm more big ideas. I'm high energy. I'm more extroverted. And with what we both do, we both get invited to speak at conferences. We speak in front of people. When I get off stage, it feels like I just had a shot of adrenaline, right? I am fired up, ready to go. Like, it's like I landed a trick. If you look at Jerry, Jerry is wiped out for the day. He's exhausted, right? So what does that mean? That means for me, if I'm getting fired up doing something and energized, that is more my lane. And so I spent, sorry, just let me click that off. So for me, once I realized that, then I was like, okay, I'm going to be more on the front-facing side of business. That's typically going to be marketing, sales, in my industry, capital raising, finding deals. That's more going to be my lane. I'm not going to be on the admin side. In the business structure, basically what that means, I'd be more visionary, not integrator. And so I would start paying attention to that. Like, what do you do that energizes you, that is easy? And then you can find ways to plug that into business, right? If you're more analytical and maybe you like order, like Tawny's a good example for this that works with me. Tawny loves her to-do list and checking things off the box, right? She loves that. She's super organized. She wants to get things done. And so she's going to be in some type of admin role. She's going to be in some type of maybe COO role, not me. So you got to find out what you do, what's easy for you and what energizes you. And then you basically will invest in yourself to sharpen the tools, and then you go apply them. So, what that would look like for me personally. Once I realized that I like selling, not like actual sales, but like presenting ideas and getting people excited. I knew that speaking in front of an audience was going to be very valuable for me. So then I started basically educating myself on how that's done. How do you write a keynote? How do you, tell it in a way that's engaging? When are you supposed to pause? Like all of these things, right? I listen to a lot of podcasts. Like I'm constantly trying to educate myself to get better at it so that when I do it, I perform better. So that would probably be my best advice on what you should do. But 22, I would say, most people at 22 are trying to figure it out and don't know what they're supposed to do. Like you're in a normal position. There's nothing weird about it. I would just really recommend doing that. And then go test things, right? Like internships, working for people, hitting up people that are doing something that you want to be doing and just seeing how you could help. Like that's going to be very valuable for you to learn and figure out if you like doing what you're setting out to do. Basically, use your strengths for a career path instead of things you do as a hobby, or maybe what I imagined as a kid. Yeah, so this one, I would not recommend doing something as a hobby or something that you enjoy in a hobby, because hobbies are hobbies. Hobbies don't mean you're making money. So I think actually it's finding out your skill sets. You have to know what you're good at, and you actually have to know what you're bad at. If you don't know those two things, you're going to flounder. And then the other thing is I think purpose is really important. Like finding out what you were built to do, like why we are here. I know that's a deep question. Most people don't want to go that deep, but if you understand your purpose and why you're doing something, you're not going to have burnout. And that's something that's very common in business. It's common in life in general. The only way to avoid burnout is to understand your purpose. That's the only way. And so I would spend some time doing a deep dive on that. All right, everybody, I've got to run. I've got to go head out to see the kids and the wife. I love you guys. Let's finish out strong, finish out the week strong, finish out the year strong. I will talk to you all soon. Have a great rest of the week. All right, you know what I'm going to do? I'm going to spend the next 5 minutes on TikTok.